My role in the bank is a Director of Payments. And what does that mean? It means initially I'm responsible for the bank-wide strategy. What role do we play today? But moreover, what role do we want to play in the future to improve customer service, make the experience of payments far better for our customers, but also to add value to the bank. In addition to that, I'm responsible for the day-to-day service that we provide. So payments processing, are we delivering on time accurately to our customers? And then in addition, the major transformation program and the mandatory programs to ensure that our infrastructure remains compliant, functional, resilient, and can deliver the needs not just of today, but for the future as well. Open banking is a huge theme, and it's all about the future of banking. If we look, it's a multifaceted phrase and it's overloaded. It means different things from different lenses. If we look at it from the regulatory lens, which is key right now, we have multiple authorities now legislating and providing regulatory input on open banking, and there are three broad policies and reasons why they're doing it. The largest and the most significant is competition. The CMA wants to, in their words, tilt the playing field, and that means tilt the playing field of banking and banking services away from the major clearers who provide a whole suite of services to their customers, and tilt it towards a more competitive open market where many more third parties, not just challenger banks, but also third parties, application providers, software providers, aggregators can provide services directly to the customer. And so competition and driving competition is the key policy. The second policy is to improve and increase innovation. Through that process of opening up competition, it encourages more digital innovation within the financial markets, which they want to see, to make the UK and Europe as competitive as possible. And the third point, which is largely directed at the EU, is to consolidate and reinforce the concept of European Union. In that, in the payments world, for example, payments can be made transparently across the European Union rather than just within domestic borders. So this is about more competition, more innovation, and opening up borders to have transparent transactions. So that's the sort of regulatory lens, but if we look at what does that mean in the real world more broadly, it means an ecosystem where you and I as customers, where our corporate customers, where SMEs have more choice. It means that many more third parties can access their data, can access the banking infrastructure through API technology to provide services for them. This means that the traditional model today of you having a bank account with the bank probably for life, because we find that consumers particularly are quite resistant to change and find that quite a difficult process, and also an emotional reaction to changing their bank account. It means that your relationship may be with a completely different provider, an app provider, for example, and that app provider will then go out to the market to source the best possible product for you to meet your needs. And so through that approach, there's aggregating your requirements in one place, irrespective of who the provider is. So that's really interesting as a fundamental shift in the way that people bank from today and how they're going to bank in the future. There are many use cases of open banking that one can consider going forward, but if I pick some main categories, the first is what we would call price comparison. We've all seen the adverts, we've all seen the websites for moneysupermarket.com, etc. And what it's doing, it's enabling you to look across a spectrum of products. So let's say, for example, you want an unsecured loan, or you require a mortgage, or you want a savings account. It will provide you with a spectrum of the best in the market. Now, currently what you will do is you will go from that website through to the provider of that product. No more with open banking. With open banking, that comparison organisation can source that product on your behalf through API access to your bank account. Now, it will need the consumer or the business's approval, It will need a careful framework around how we apply that, but it means that comparison organisations can go beyond just providing that comparison service. And what we're already seeing is organisations positioning themselves in the market as a comparison website or a comparison source, and the guess is that as this regulation moves into force, that they will then be accessing the bank account to provide that service on your behalf, and clearly build a business case around that to service customers. That's a challenge. If you think about it from a bank perspective, what does it mean? It could mean that we lose that customer interface and that direct relationship we enjoy with our customers today. That being said, as a bank, we need to consider whether we want to provide that type of service or partner with organisations that do. The second use case, which is not dissimilar to that, is around aggregation, where a company can aggregate your financial services, and that provides them with the capacity to see a broader range of financial activity than say, we can today. And through that process can do things like looking at trends for fraud, trends for things going wrong, and arguably, and to be proven, can provide a better protection for customers going forward. The third area, which is a huge area and obviously one close to my heart, is that of payments, where we're seeing a plethora of what's called payment initiation service providers and payment service providers coming into the market, which means that the world we live in today, where typically you will make a payment using a piece of plastic, your credit or debit card, maybe cash, rarely a cheque, but that's how we operate today. Going forward, we will see a different approach to payments. We've already seen contactless, that one-touch approach to making a payment. Currently, a card sits behind there, so your debit card or a credit card will sit behind that transaction. Going forward, that will be directly connected to networks such as faster payments. So you will push a button, instant payment, and speed, which is what customers are looking for as well. So this provides competition for those big card schemes that we all know and love, but it also provides a lot of competition to manage that customer relationship for the traditional and existing banks today. The last use case, and similar in theme, is that of lending. So if we think about that money supermarket analogy I made, in lending, this will allow customers to more broadly open out and choose the lending product irrespective of the brand that's providing it. And time will tell how customers react to brands, how important it is to have a bank brand attached to a lending product, for example. And this will provide greater choice, greater freedom, but moreover encourage consumers, SMEs and businesses to look more widely for the best product for them. Open banking is going to affect payments hugely. I think this is the biggest shift in the market we've seen since the launch of the debit card. And I think it's going to be even greater than that because it's more far-reaching. So let me give some examples. Currently, one of the things that customers really worry about is security. You as a consumer, be they corporates, be they SMEs or individuals, want fundamentally three things in payments. They want speed. They want it to happen now. They don't want to wait 3 days or 5 days for a transaction to clear. They want certainty. They want to know that payment has happened. They want to know the money has gone in or out of their bank account. And they want safety and security. They want to know that their information isn't being hacked or cloned. They want to know that their bank account and their transaction base is secure and private to them. So 3 fundamental things. And if you take that as the premise of what open banking will reinforce, we think about safety and security. One of the challenges we had from the dot-com era to today is encouraging consumers particularly to put their card details, address details, personal details on the web for fear that that information would be shared or cloned. As we go forward and using more digital capability, we can enter into a world where you build a relationship with your financial provider, you provide authority for your information to be used for payments, And every time you make a payment, you need to put no information into the keyboard. You don't have to put your 16-digit card number, your CVC number, confirm your address details, etc., which is often irritating when you're online. This will mean with a single touch of a button and a thumbprint, let's say, a method of secure ID, you will be able to make a payment. You will be notified immediately that that payment has happened, that it's gone into the payer or payee's account, and it will also show you, if you so wish, how that's affected your balance. So the first thing is it will help the security and the feeling that your personal information is not being widely shared. The second thing I've already touched on is that data that comes with the payment. Just making the payment and it going off isn't enough. Businesses now particularly want it attached to an invoice. They want it attached to a payment. They want it attached to their procurement process. They want it attached to their invoicing process, but moreover into their accounts and account management capability. So in open banking, what we will see is organisations providing software packages, accounting packages, treasury packages, and at the back end they'll provide a payment service to facilitate the service. It won't be the bank providing the payment service. As far as the customer is concerned, it will be the software provider providing that service. And of course it will be routed through the banking system to move the money in and out of bank accounts. So we will see data, we will see security, and then the third area we'll see is speed. UK was fairly unique in that it launched the faster payment service some 8 years ago. Remained unique in the market for many years, but now we're seeing many other countries such as Australia, Thailand, Singapore, US now introducing real-time interbank payment systems. And so what we're seeing is a speed of transaction. So if you want to pay someone, you can pay them within seconds. And that's consistent with the modern world as we want to transact quickly and safely. Is open banking a good thing? I think it has to be. It's the direction of travel of all industry. This isn't unique to financial services or banking, but an open approach for transparency of transaction is, universal, and it's the right thing in a global economy. It will be good for our economy as the UK, and it will be good for customers once they get used to a different way of operating, because we know that competition drives innovation, it drives costs down, and it drives more choice ultimately for consumers and businesses. So yes, open banking is a good thing, but of course the current incumbents, and let's be clear here, RBS is an incumbent as a major clearer in the UK, as well as the card schemes, as well as other significant players who've enjoyed a market where the predominant proportion of the population and businesses use their services not just on a daily basis but on an hourly basis. That's up for grabs in essence, and therefore the existing incumbents have more to lose and arguably less to gain, depending on how they prepare themselves for open banking, embrace open banking, and depending on their choices and the decisions they make around their strategy and the role they want to play. Is your strategy to defend? I think that will be unsuccessful. We must embrace the changes that are coming and be not necessarily leading edge or bleeding edge, but certainly be a major participant in the economy for our customers. We shouldn't forget, though, that we have a very significant base in the UK. Currently, 1 in 4 of every electronic payment in this country goes through this bank. That's something we're very proud of, it's something we deliver day on day, and it's something we need to retain. Beyond that, we need to understand then how we interface with our customers. Are we happy for that to be through third parties? Do we want to be very selective over those 3 parties and build preferred relationships? Do we want a commercial model where we become an aggregator? All of these things we need to think through. Do we want to access accounts in Barclays, Lloyds, HSBC, Santander and others to provide our services? So we really need to think this through and have a very careful commercial framework, as well as the technical ability to provide and service APIs to ensure that we're compliant and to ensure that we're a major participant in this market, which is what I think we certainly are today, and we should retain that position. We just need to think through how our position and our relationship with our customers will change, because it will. Let's be candid here. We're being driven, and the acceleration of open banking is happening because of the regulator. Not just the CMA, but also the Bank of England, Treasury, Financial Conduct Authority, European Union. So we are following and conforming with that. But we're also clear that API strategy is the way forward, and we can see that benefiting us internally as well as in the external market. Is it perfectly clear what RBS has to do to respond to the drive for open banking? I think the broad direction is very clear. We know what's happening, we know that the world is opening up, and we know that we need to comply to that. But there are really two sides of it that we need to focus on in parallel. The first is the technical changes that we need to make. How do we manage this across our broad range of technical infrastructure and services? And we have, expert teams working on that, and make sure that it does comply and it does sit alongside what's happening in the industry. But in parallel with that, and perhaps the more difficult, less clear area, is what is our commercial model? What is the business model that will support a world of open banking? In my earlier comments, what do we want to be? What role do we want to play? Are we comfortable with certain things, or are we uncomfortable? And if so, what are we going to do about it? We also need to understand the economic model. How is this going to affect our costs and our income, and how do we respond to that? I would like to see us embrace this as an opportunity to reinforce our track record and our capability in payments, for example, and to build out from that. But there'll be many, many other players, and to be clear, there are thousands, not just across the UK, but across the EU, that want to participate in this market, and therefore there's a real competitive threat as well. So what is PSD2, this thing that's coming in January 2018, not so far away? PSD2 stands for Payment Service Directive 2. We've already had PSD1. And in essence, it applies to the European Economic Community, that's 31 countries, to ensure that they have open standards and API access. Interesting, because this means not only are we looking at open banking in the UK, with competition in the UK, but we're looking at it across 31 countries. So in theory, you would be able to buy services from other countries and be able to transact in an open, transparent way. And we as a bank would need to provide access. We would be obliged to provide access to whichever third party our customers choose, and that's not confined to the UK. So this is applying a common standard across the European Economic Community, 31 countries, to ensure that the principles of open payments in banking can apply. The biggest question we get, and I think the biggest challenge that we need to answer, is, are we the bank? Are we going to lose customers? Are we going to lose business in this open world and allow our business to be taken away by third parties, but moreover lose that relationship and that direct contact with our customers? The answer to that question is simply yes, there is a threat. More competition means more challenges and more risk that we're going to lose business. And therefore that strategy I spoke about, that ability to compete and be a participant in an open banking world, is key to the future of the bank. We have a lot to lose, but we also have a lot to gain. We can't rely on the fact that bank accounts are quite sticky and that customers tend to stay for life, if not for a very long period of time. Over time, that will change inevitably as new generations come through. So we have to really be on our mettle, I think, in terms of customer service. Be number one in customer service, trust and advocacy is going to be more important than ever before, and to make sure that our bank of brands remains significant in people's minds and that they associate our bank and our brands with safety, security, simplicity, and certainty around everything they do in their financial management.